Hello, and welcome to a comprehensive analysis of the critical finance and macroeconomic trends that will shape our world in 2025. The coming year presents a dynamic economic landscape with profound shifts across various sectors. Let's dive into these themes and explore their implications for businesses, investors, and everyday consumers. First and foremost, artificial intelligence, AI, integration in finance continues to redefine the sector. Financial institutions are adopting AI technologies at an unprecedented pace, enhancing efficiency, automating processes, and delivering personalized client experiences. However, this transformation also raises significant challenges. Trust in AI-driven decisions, data privacy, and the widening skills gap for financial professionals are issues that demand attention. As AI tools become more sophisticated, policymakers and industry leaders will need to strike a balance between innovation and regulation to maintain market integrity. The integration of machine learning algorithms into trading systems, credit assessment models, and fraud detection mechanisms will further reshape traditional financial operations. This transformation not only enhances precision and decision-making speed but also calls for new governance structures to ensure fairness and accountability. The second key theme is geopolitical tension and its impact on global markets. As trade policies evolve, protectionist measures like tariffs could re-emerge, especially in light of potential political shifts. A return to a more isolationist economic stance could disrupt supply chains and increase market volatility. Investors must prepare for the ripple effects of these changes, closely monitoring trade agreements and international relations to mitigate risk and seize new opportunities. For instance, the ongoing technological competition between major economies, particularly the US and China, will likely shape investment flows and innovation policies. Navigating this terrain requires staying informed on policy announcements and aligning investment strategies with geopolitical developments. Private credit markets are set to experience significant growth. With traditional lending channels constrained, institutional investors are increasingly turning to private credit as a lucrative alternative. This shift is supported by favorable regulatory changes and growing demand for flexible financing solutions. Businesses seeking capital will find expanded opportunities here, but due diligence remains crucial to navigate the complexities of private credit structures. Increased investor interest in direct lending, mezzanine financing, and special situations funds highlights the diversification potential within this sector. Nonetheless, the lack of standardization and transparency in private credit deals underscores the importance of rigorous risk assessment and expert guidance. Mergers and acquisitions, M&A, are expected to surge, driven by lower interest rates and reduced regulatory scrutiny. Industries such as life sciences, financial services, and insurance are poised for heightened activity. Companies aiming to scale or diversify their portfolios will look toward strategic partnerships. Investors should be prepared for a dynamic M&A landscape, where agility and strategic foresight will be key differentiators. Cross-border mergers could also see a resurgence, opening opportunities in emerging markets where economic reforms and demographic trends create fertile grounds for expansion. The role of private equity in driving M&A activity cannot be overstated, with an increased focus on sustainable and impact-driven investments gaining traction. Interest rates and inflation dynamics continue to dominate macroeconomic discussions. While global inflation has moderated, the specter of price increases still looms. Central banks, including the Federal Reserve, are likely to adjust monetary policy to foster economic stability. These moves will impact borrowing costs, investment returns, and consumer spending patterns. Understanding the nuances of interest rate changes will be critical for making informed financial decisions. Investors should monitor inflation-linked bonds, real estate, and commodities as potential hedges against inflationary pressures. The interplay between fiscal policy and central bank actions will also influence market sentiment and financial planning strategies. Technological advancements, particularly in AI, data centers, and biotech, are reshaping investment opportunities. The AI revolution has far-reaching implications beyond finance, influencing sectors from healthcare to manufacturing. Investors should focus on innovative companies that harness technology to drive efficiency and create new markets. Staying ahead of technological trends can provide substantial returns for forward-thinking investors. Companies developing AI-driven medical diagnostics, autonomous vehicles, and next-generation semiconductor technologies represent key areas of growth. Moreover, ethical considerations in AI development and deployment will shape regulatory landscapes, presenting both challenges and opportunities. Global economic growth is projected to stabilize around 3% in 2025 and 2026. However, potential slowdowns, particularly in the United States, pose risks. Policy changes, such as stricter immigration rules and trade tariffs, could dampen growth prospects. Businesses must remain agile, adapting to shifting regulatory environments while positioning themselves to capitalize on emerging markets. Regional diversification and supply chain resilience will be critical strategies as geopolitical tensions and climate-related disruptions become more pronounced. Economic recovery patterns across different regions will require careful monitoring to identify areas of high growth potential. Climate change and the green energy transition are becoming economic imperatives. Addressing climate-related risks requires massive investments in infrastructure and sustainable supply chains. Industries involved in renewable energy, electric vehicles, and carbon capture technology are likely to benefit. However, transitioning to a green economy also presents challenges, including managing costs and navigating regulatory frameworks. The introduction of carbon pricing mechanisms, green bonds, and sustainability-linked loans will reshape capital markets. Companies that prioritize environmental, social, and governance (ESG) factors will not only mitigate risks but also enhance long-term profitability and brand reputation. Labor market dynamics remain a critical factor. Persistent labor shortages in sectors like construction, healthcare, and technology can limit productivity and economic expansion. Companies that invest in workforce development, automation, and innovative hiring practices will be better positioned to thrive in this environment. Policymakers, too, must craft strategies that address both short-term labor shortages and long-term workforce resilience. The rise of the gig economy, remote work, and reskilling initiatives will shape the future of work. Understanding demographic shifts and integrating diversity and inclusion strategies will also be key for sustainable growth. Lastly, consumer budgeting will require adaptation. As central banks modify monetary policy, individuals must rethink their financial strategies. Preparing for possible rate cuts, tax adjustments, and continued inflation will be essential for effective household management. Financial literacy and proactive planning can empower consumers to navigate economic uncertainties with confidence. Building emergency savings, optimizing investment portfolios, and leveraging tax-advantaged accounts will be crucial steps. Additionally, digital financial tools and robo-advisors are becoming more accessible, enabling consumers to make data-driven decisions with greater ease. In conclusion, 2025 is shaping up to be a pivotal year for global finance and economics. From AI integration and geopolitical shifts to private credit expansion and green energy investments, the themes we've explored today will influence how businesses operate, how investors allocate capital, and how consumers manage their finances. By staying informed and adaptable, we can all position ourselves for success in this evolving landscape. A proactive approach, continuous learning, and strategic foresight will be the hallmarks of those who thrive amid the changes ahead. Thank you for watching. If you found this analysis insightful, don't forget to like, share, and subscribe for more in-depth discussions on finance and economics. Stay tuned for future updates as we continue to explore the trends shaping our world.